Okay, that's the 2 minutes up, and I think we'll get started. Good afternoon, everyone. If you're joining us for the first time today, I'm Steve Kenzie, the Executive Director of the UN Global Compact Network UK. It is my pleasure to welcome you to Finance Mobilization for the Circular Economy, the fourth event in our two-day Climate Action Summit to deliver a net zero future. This is also the final event of the day. And we appreciate certainly that you've been with us all day if you have, or those just joining now for the financial segment. Before we get started, just a bit of housekeeping. This event is being recorded, and we will make that recording available to you after the session ends. We are in webinar mode, and that means that our attendees will be muted and unable to turn cameras on throughout. But we are still very keen to hear from you, and there are two ways that we want that to happen. We've allowed a fairly significant block of time for Q&A with our esteemed speakers. So if you would like to pose a question, please do it through the Q&A function. You'll see a button at the bottom of your screen that will allow you to use that. In addition to posting your own questions into the Q&A, you also have the opportunity to upvote questions that others have posted by giving it a thumbs up. And that's really important. Every session so far today, we've had more questions than we've been able to get to. And so having your votes will help us to prioritize the questions that are most important to you. So please do keep an eye in the Q&A box, put your questions there, and give a thumbs up to the questions that you'd like us to prioritize. The recordings aren't going to be available today. We do need a little bit of time to turn it around. So they will be sent out in an email to everyone that registers. There will be a link, and then they'll be available on our website in due course. Okay. If you just want to make a comment, or you're having any sort of technical difficulties, or you just want to give a shout out to the other attendees and share your LinkedIn profile, we're very happy for you to do that in the chat box. And so there is, again, a button at the bottom of your screen called chat, where you can open another pop-out window and put your comments in there. So please do take advantage of that. Comments in the chat, questions in the Q&A, and we will get along just fine. If you're using social media, if you're a Twitter or a tweeter, or you're on LinkedIn, please do tag us and use the hashtag CA Summit 2022. We're really keen to get this, amplify the message that the summit's happening, and to drive more participation around these critical issues of circularity and nature-based solutions. We've turned on the closed captioning, the live transcription for this session. So there again, there's a button at the bottom of your screen if you need that feature. But do bear in mind that the text is generated automatically by Zoom. And so we apologize for any typos and errors there, but they are completely beyond our control. Okay. I think with that, we can move on to the next slide. And thank you for the patience of those of you that have sat through this a few times already. But for those that haven't, we do want to tell you just a little bit about the UN Global Compact. We are the largest corporate sustainability initiative in the world. There are over 17,000 companies around the world participating, another 4,000 non-business organizations. They have all made a commitment to our 10 universal principles in the areas of human rights, labor, environment, and anti-corruption. These principles are drawn from UN treaties. So it's not just marketing hyperbole to say they're universal principles. They really are. And it makes for a very powerful message globally for our initiative. Wherever you are in the world, the 10 principles are going to be relevant. To make that even more so, we have local networks in over 70 countries, And it's our role to support the companies that have made a commitment to the Global Compact through programming like today's summit. We address issues that are relevant in local markets to help make companies more sustainable. To join us, your CEO needs to make a commitment to the Secretary General through a letter committing to operationalize our 10 principles throughout your organization, to report annually on the progress you're making towards that end, and to support the wider UN development agenda. If you're not already in the Global Compact, please do get in touch. There are some links in the chat with some more information and to help you to do that. We would love to hear from you and have that conversation. Okay, next slide, please. We've had a really full and exciting day today discussing the principles of the circular economy and how business can implement these to reduce emissions. During this session, we want to focus on scaling finance in order to implement these solutions. We have a fantastic lineup of speakers, starting with Keith James, Head of Policy and Insights from WRAP. Next up will be Patrick Schröder, Senior Research Fellow at the Environment and Society Program of Chatham House. Then we have Lisa Lange, ESG Engagement and Stewardship Manager from Federated Hermes. And finally, Gary Kendall, Head of Climate Strategy Implementation at the NatWest Group. Each speaker is going to give 5-minute or so intervention, and then we're going to move on. And we've got about 40 minutes scheduled for Q&A. Sorry. So do please, right from the start, feel free to start putting your questions into that Q&A box, but please do not ask us about whether there's going to be a recording. Yes, there is. It's coming. Okay, so without any further ado, it is my pleasure to hand over to Keith to get things started. Keith, over to you.
Thank you very much, Steve, and hello everyone. It's great to be with you today to talk about finance mobilisation for the circular economy. The circular economy is not an abstract future concept. I think sometimes we talk about it as though it's this fantastic thing. Wouldn't it be great if the world was like this? It already is like this. The circular economy in the UK is already adding £41 billion a year in terms of value to the economy, and it already employs over 560,000 people. So to put it in context, it's adding about the same amount of value to the economy as the hospitality sector pre-COVID. So it's a really significant sector already. And that's just the part of the circular economy that we can see in official statistics. So we can see reuse, we can see rental, we can see repair, and we can see recycling. We can't see remanufacturing in official statistics, and we can't see reuse, repair, rental going on within mainstream organisations. So that value of £41 billion a year that it's adding to the economy is a conservative estimate. It grew by about 19% between 2015 and 2019. So we think actually there aren't necessarily any policy barriers to creating a circular economy. And if we look across the EU, we see a similar story as well. So the circular economy across the 27 member states of the European Union currently employs about 3.4 million people, and it's adding about 270 billion euros worth of value to the European Union economy every year as well. So it's a really exciting area. It's growing, and we think there are huge opportunities. We think that policies can create an enabling environment for growth. There's always something that you can do for change, but we have been looking at some of the policies that can improve productivity. So when we're thinking about how we can grow and how we can have more productive economies, traditionally we've looked at labour, we've looked at issues around capital, and we've looked around technology. We haven't necessarily focused on resource productivity and looking at overall material use or resource constraints. And so we think there's an untapped opportunity here that we've perhaps neglected. If we look at resource productivity as part of the circular economy, we think policy can support that. We've recently done some work for the UK government on different policies that they could implement, and there's a report on resource productivity policies on our website, covering a whole range of sectors, but we think there are opportunities to introduce policies for construction, food, vehicles, furniture, all sorts of different areas that can really support growth. The final challenge that I just wanted to cover in this introduction is about finance. So with some of these business models, we're talking about perhaps longer payback periods. It's not about the quick wins. And we're talking about everything from large-scale investment in electric arc furnaces to enable steel recycling, which would be hundreds of millions of pounds, down to SME startups looking to have local repair services. There are going to be different financial models that suit different actors and different sectors. And part of the challenge for them is to navigate their way through the finance system. We think that there are different ways that the finance sector can support the circular economy. So there's conventional bank finance, there might be the capital markets, but there's also foundation and impact investors, the opportunity for venture capital and private equity, and perhaps crowdfunding for some of these small organisations as well. So there's a whole range of different ways that we could fund the sector to continue and accelerate its growth. Thank you very much.
Thank you, Keith. You know, that I'm shocked that we managed to get through the whole day till now without it coming up. Just how big a sector it is already. That's really very interesting, and I think reassuring. It sort of felt like a lot of our conversations today were a bit hypothetical. So I really appreciate that grounding. That yeah, it's happening now, and nobody should be thinking about this as something for the future. It's something that if you're not actually thinking about introducing circularity into your business now, you're at risk of being left behind. So a really great point to get us started. Okay, thank you very much. And now we're going to hand over to Patrick.
Hello, yes, good afternoon. I hope you can hear me. Thanks for inviting me to join today. And I just want to confirm actually that last message, that the circular economy is already happening. It's not something hypothetical. And I'd just like to take this opportunity to introduce a project in which we're involved, and it's about supporting efforts of multinational brands to create circular value chains. So circularity is not only about, for example, a company based in one country, but very quickly there's realization actually a circular approach really requires going upstream and downstream in the value chain, and finance mobilization, especially to work with suppliers, is a key issue that's come up. So this specific project is funded by the European Union and Finland, and led by the United Nations Industrial Development Organization, UNIDO. We are a partner here together with Circular Economy, a Dutch consultancy that publishes the annual Circularity Gap report that you might have seen, but also the European Investment Bank. And it targets 3 value chains, all of which are very global: textiles and garments, plastics packaging, and ICT. And maybe if we go to the next slide, please. Yeah, so the way these projects were developed, so this is very much demand-driven. There was a call for proposals put out last year asking EU-based multinational companies to come forward with ideas or project proposals of what types of initiatives they would like to undertake with suppliers in developing countries. And so based on these, then the projects were selected. Maybe one thing to mention about the role of the European Investment Bank in this one. So the EIB already has a large portfolio on circular investments for Europe. It's a 10 billion euro program where EIB is working with some of the promotional banks in Europe to channel these funds towards circular business models in Europe. Now, within the scope of this project, the expectation is that this will be expanded towards the businesses outside of Europe. So one of the key issues is that a lot of circular finance currently, or circular investments, are targeted at businesses in Europe or the US or Japan, basically the industrialized countries, and there's really a lack of investment going into countries in the global South. So one role that we have as Chatham House is looking at the enabling policy environment in countries, which is a key issue really to not only to implement the pilots, but also to affect positive change in the wider sector. Just maybe to the next section, next slide, please. So this is like a brief overview of some of the businesses and brands which are involved in the countries. So at the moment, so the target countries are Morocco and Bangladesh, and the third one is still TBC. That project is on the ICT value chain, still under development. But the reason I wanted to show this slide is also to show that when brands want to start shifting towards circular value chains, there's a whole range of activities that need to be undertaken, a lot of stakeholder engagement. So it's not only simply about changing some of the maybe logistics and trying to close loops, but there's all these different activities are quite necessary to undertake. As I mentioned, how to shape policy, research and practice, but also developing business capacity, especially if it's upstream suppliers, but also relating to informal sector, because in many developing countries, the informal sector plays a key role in the collection and handling of secondary materials. Providing new mechanisms for circular finance is also a key issue. Working with circular service providers, consumer attitudes, or and public-private dialogues, especially with government, trying to understand also how national policies either support or hinder more circularity. These are also really important because we now have a whole range of new policies coming in through the EU's Circular Economy Action Plan, Sustainable Products Initiative, Sustainable Textiles Strategy, and there are really many questions how these EU policies can be aligned with supplier countries. Just stop here. Thanks very much. Happy to answer any questions that you have.
Thank you very much, Patrick. It's great to see, again, so much work already being done in this space. Allow me to encourage questions to start coming in. Thank you, Neil, for getting us off and running, and we are welcome to see more. And now let's move on, and we're going to hear from Lisa.
Hello, everyone. Thanks for inviting me to this call. I want to offer a slightly different perspective. My name is Lisa Lange, and I'm part of the stewardship team in Federated Hermes. Maybe you can go to the next slide. Sorry. Great. So my role is slightly different. Rather than being directly in the investment process and looking at investing in particular companies, I engage with a large set of companies on behalf of a set of institutional investors, so large pension funds with in total around 1.5 trillion in assets. So what is our aim? Our aim is really to give investors the opportunity to be more active owners and to encourage the companies that they're invested in to have better ESG performance. So if you look at the chevron diagram that I put in here, circular economy is one of the key aspects we engage with companies on, in addition to climate change, human rights, and other more governance issues. And obviously, these are very, very interconnected. So it's a key part of engagement with companies. And our aim here really is, if this is considered material for that particular company, to really encourage companies to set adequate strategies and make those internal investments to move to more circular business practices. So it was great to hear from Keith that there's a lot of opportunity, financial opportunity in circular economy, and that is what we really encourage companies to do. There are two sectors that I'm more directly involved in. We've had a lot of engagements around plastic packaging, for instance, and with the apparel sector, where we also published some investor expectations documents to enable us to have very informed discussions with the companies and encourage them to set specific targets. I think the challenge that we have with circular economy from an engagement perspective is that there's a much more variety in the terms of metrics that we need to look at when we assess companies. So rather than with climate change, where there's the kind of more straightforward emissions reductions category, when we look at circular practices, there is a much more of a basket of indicators that we want companies to look at to better understand their own impacts and to identify opportunities. But I can talk to that in more detail in the question section. Thanks for your attention so far.
Thank you, Lisa. I think that's another really important point to make, is that there's money to be made in circularity, and investors have taken note of that. I think, again, the perspective we've, at least the sense I've sort of had from the conversations earlier today was more about how are we going to attract investment. And it sounds like, I mean, that's always an issue, but it sounds like the fundamentals are already there.
I think the fundamentals are definitely there. I think from the past 5 years, having engagement dialogues with companies, there is much more focus on this topic. There is a much better understanding. It is not as developed as for other issues such as climate change, but I do see a positive progressions in my dialogues with various companies, primarily in Europe, but also internationally. I also engage with a lot of financial institutions that our clients are also invested in, talking to them around how they provide finance as well. So those are quite interesting conversations as well.
Fabulous. Okay, let's move on to Gary now, and then we'll get into our Q&A. Gary, over to you.
Yeah, thanks, Steve. Good afternoon, everybody. Just quick word to introduce NatWest Group and its purpose, which is to champion potential, helping people, families, and businesses to thrive. And that purpose expresses itself through three pillars, or three kind of focus areas, if you like. First is enterprise, the second being education, and the third being climate change. And the reason I mention that is because, as the previous speakers have alluded in their own ways, those three focus areas kind of coalesce around the circular economy. And so this is an area of great interest to us. But I wanted to kind of zoom out firstly to 30,000 feet, or roughly 10,000 meters if you work in a metric system, and think about this from a kind of systemic point of view. And what really is the challenge that we're trying to overcome here is that the economic system is currently in a state of ecological overshoot, and climate change is merely not to diminish it at all, but is merely a symptom of that underlying problem. Nature and biodiversity loss is another, pollution is another, land degradation is another, and the challenge here is that we extract resources and fill up sinks faster than they can be regenerated. And this brings us to why the circular economy is so attractive. It's because it carries this tantalizing promise of decoupling continued economic growth from material throughput and decoupling in absolute terms. The fact is, at the moment, that promise of absolute decoupling at the system level remains unfulfilled, because, as we know, most of the indicators of interest are still heading in the wrong direction. But that's not to say that the principles of the circular economy can't move the dial in the right direction. But it's also worth just considering that this shift that we're trying to bring about from linearity to circularity really, in the end, demands a change in incentives that drive behaviors within the system. And at the moment, we are still wrapped up in a complex of incentives that encourage behaviors favoring short-termism and the drawing of increasingly narrow boundaries. And what we need, if I can quote for a moment John Elkington, who many of you will know, if not in person, then by reputation. John challenges us to think longer, connect wider, analyze deeper, and aim higher. Now, many of those incentives are set up by the goals of the system, and there are barriers to changing those incentives. And these barriers include physical laws, the tendency for energy and materials to move from concentrated to distributed. They also include mental models. For instance, the idea that human beings and human civilizations operate on a different plane from the rest of nature, which of course is untrue. And there are also cultural norms. To give an example, we are very clever engineers who can always solve problems with some combination of energy and technology. And I submit that many of our challenges here are actually cultural challenges, not engineering challenges. Now, bringing it down to finance is maybe not obvious, but finance has both the motive and the means to change incentives. And I put to an extent as the caveat there, because we still operate within a framework of regulation and policy which creates incentives. And those incentives can be better or worse at promoting circularity over linearity. And previous speakers have alluded to the policy changes that are required. Having said that, we can create incentives both for ourselves and incentives for our clients. In the case of NatWest, what do I mean by that? Well, creating an incentive for ourselves, we set the target of a cumulative target of 100 billion of climate and sustainable funding and financing to be achieved between 1st of July 2021 and the end of 2025. And the latest results suggest that we've achieved 20 billion of that 100 billion cumulative target as of middle of this year. And we can also create incentives for our clients by offering green loans, sustainability linked loans, which sort of track various KPIs that a company might be interested in following in the direction of circularity, and in various criteria around general corporate lending that achieves circular objectives. And so we have some very strict inclusion criteria around what sort of qualifies towards this 100 billion funding target, and circular economy solutions certainly feature front and center in that. So that's all I really wanted to say. Again, very happy to field questions. Back to Steve.
Thank you, Gary. Thank you all. This is unprecedented that we're actually running so far ahead of time, but not an unwelcome state of affairs. So let me invite you all to turn your cameras back on, and let's get stuck in to the questions that have been coming in. So to the audience, please keep the questions coming. And we've got 9 open questions now, and it would be a big help if you could have a look and vote for the ones you are most keen for us to start on, and then help us to continue to prioritize as we go along. We've got a good 40 minutes that we can work through this, so we should be able to put a good dent into these, I think. So why don't we get started with a question from Harriet, because I think it's a nice, very broad question to do some foundation, and we've talked about it perhaps, but let's take it on directly. Can you explain a bit more, please, about the link between growing productivity and the circular economy? I'm thinking maybe, Keith, could you kick this off?
Yeah, certainly happy to. So what we're thinking there is resource productivity and the amount of value per unit of stuff that a company handles. So if you can make more money per unit over a longer time, you can increase the resource productivity. So an example of that would be rental of garments, for example, which is something I might come back to on answering other questions further down. But then reuse is extracting more value from the same item as well. Recycling is extracting more value from the same materials and can potentially help with issues around balance of trade. So I gave an example of steel earlier. We make about 7 million tonnes of steel in the UK. We use about 15 million tonnes and we export about 8 million tonnes for recycling. There's an opportunity there to make steel more productively in the UK at lower cost, but that requires a huge transition within the sector, and there are a number of barriers to that, which is where in finance and investment come in, and the supportive policy environment also come in. So a range of different ways that circular economy can support productivity.
Thanks, Keith. Did anyone else want to come in on that? Lisa, you are nodding.
Yeah, I very much agree with Keith, and I think taking a step back, just on a fundamental level, if you have a linear system, you're extracting value materials, and then you completely lose the value of the material at the end of the process because it just ends up at waste, being incinerated or in landfills. So fundamentally, there is an economic argument to capture those materials to extract further value for them. It seems very logical to me. It's just that our systems are set up in a way that don't enable that easily at the moment. So we need to have some fundamental shifts to enable that, keeping the value of those materials in the economic system, so to say.
And of course, that some of that is a design challenge, isn't it? That the transaction costs of extracting that value without the systems in place are prohibitive. So we need that potentially big investment in creating infrastructure to enable the subsequent extraction of value. Yeah. Okay. Patrick, Gary, anything to add? Shall we move on? Okay. So Geisha's question has attracted a number of votes. So I have heard about a lot of small circular businesses, e.g. local zero waste groceries, closing amid the pandemic. Is financing support accessible to such circular SMEs that aim to prioritize local producers and influence consumer behavior, or are finance resources tending to be designed for larger and more tech businesses? Maybe, Gary, I could come to you with this first, because I know NatWest is extremely invested in SMEs here in the UK. Is there an angle where NatWest is going to support a company like this that starts to address what Geisha's asking?
I think, yeah, I made the point up front that it's sort of one of the prongs of our purpose is to support and empower small and medium enterprises, and of course we don't see these pillars of our purpose as being at all in conflict or separate, isolated. They really work best when they come together. So if we can empower our clients with the kind of information and tools and understanding that's required in order to see where their opportunities are to become more productive, or to scale up solutions for towards whether it's circular economy or whether it's climate change or whatever. And so that's what we're trying to do. We've got various tools and frameworks available. We've got products that support that, and we're very keen to grow in this area. And the fact that we've set ourselves a cumulative lending target of 100 billion over 3.5 years also empowers our relationship managers to go out and find these opportunities, right? So that's also part of the incentive complex that I was talking about.
So yeah, they're motivated to proactively go look for companies that will tick some of those circularity boxes to allow them to access that fund and meet your own internal targets. Yeah. Now, before I'd like to come to you on this, Lisa, but before we do, I'm just thinking, while we were talking about your products, Gary, Neil asks if you're offering preferential rates for climate circular opportunities. So you pretty much have said that. Is that the form your support takes? Like, would a line of credit have a lower interest rate, for example?
There are various incentives that we can offer, whether it's flexible payment terms, could be a discounted interest rate, could be waiving of arrangement fees, repayment holidays, those types of things to try to whatever it really, I won't say whatever it takes, but we'll use the appropriate incentive in order to take an opportunity that might be difficult and make it easier, right? So we're trying to lower the activation barrier to some of these solutions.
And just really briefly, but just to be fair, can I ask you a very difficult question? Are there any other, are you seeing similar action coming from other retail banks here in the UK? I would understand completely if you didn't know anything about it, and that would be perfectly fair. But if you were able to say,
I don't know if I'm best placed to comment on that. Maybe Keith actually has a view of
good idea,
of what our competitors are up to in this space.
Okay, but let's circle back on that, or feel free, Keith, to intervene. But Lisa, I'm interested in, I know a lot of private equity firms that we work with talk about investing in smaller companies, and there's small companies and small companies, and the difference between a company with 1 million turnover and one with 200 million turnover, it's a different beast altogether. But both are considered small companies. But I could see investors taking a greater interest, perhaps, once a company gets just a little bit bigger, but is still small. A very roundabout way of saying, what are you seeing, sort of through private equity or your own activities with smaller companies, and how are you supporting them around circularity?
I will answer this in two ways. On the one hand, I'm engaging on behalf of very large institutional investors, which means that the way we select companies for engagement is based obviously on how material that company is in terms of the system, or if there are specific ESG concerns, but also in terms of how many holdings our clients have. That means it is quite skewed to larger blue chip companies. So I engage more with, the big names. What I can say there is that I've seen a trend for those companies to have more partnership initiatives with smaller companies when they pilot projects, for instance. We see that as very positive. On the other hand, I also work closely with our internal Federated Hermes investment teams that have more focused funds. So for instance, I think we have an impact fund and an SDG fund that are quite targeted and focused on outcomes, where there is also investment in smaller companies. I think the discussions we have with them are very different, because often these smaller companies might be not as advanced in terms of having a very structured governance setup, but which is a concern, but on the other hand can be very pivotal in creating innovative projects that change the system. But in the roundabout way of saying it, a company needs to be of a certain size to be adequate for investment as well.
Thank you. Patrick, could I come to you now on this? What are there opportunities for smaller business to get finance to start changing their business models and participate in your project?
Yes, hopefully. I mean, it's a challenge, as was pointed out before. So, I mean, another challenge actually is not only on the side of the companies or the small businesses, but outside of Europe. One thing that we have also noticed is that the capacity of banks and financial institutions, who often don't necessarily have good understanding what circular economy is, so they're not necessarily ready to, they don't have maybe a portfolio on circularity yet. There needs to be quite a bit of capacity building for financial institutions to be able to understand what a circular business model is and how this is different maybe from a linear model. So that's also one thing that we're trying to work on.
Yeah, great point. Keith, anything to add, even if it's just to fill in the question on Gary's competition?
Yeah, so I can't speak so much about Gary's competition,
Okay.
but what I can talk about in Geisha's question is about the support that government provided during COVID. So RAF ran and continues to run grant schemes on behalf of governments. So one of the grant schemes that we ran recently was the Resource Action Fund, and under that we had some emergency funding for surplus food redistribution to make sure food could get to the people who needed it, and the organisations got the funding to maintain those services. We also in Wales run the Circular Economy Funds. That's £6.5 million that's gone to support recycling, reuse, remanufacturing organisations in Wales to make sure that they can take the opportunities as well. So it's not just about what banks can do, it's about what governments and other organisations can do as well.
Thank you all. Okay, let's move on to our next question. It's come from Sophie. Quite a high level one. What effect do you think the current state of affairs across the globe, the economic crises, the wars, etc., will have on our ability to finance / invest in circularity and climate action? I'm thinking, Lisa, I'm going to start with you on this. It's obviously changed the risk considerations in many ways. Is it making these activities more attractive because they build resilience, or is it taking the eye off the ball and raising concerns about returns?
It's a challenging question. I think a more complicated global environment is a challenge, full stop. I think it is very specific to which market and which sector you're thinking about, because impacts have been not evenly distributed. It is definitely something that we are very actively discussing with companies, and our aim here is really to make sure that companies fulfill the commitments that they've made already. So for instance, we have a lot of companies that have set specific targets for using recycled materials, specific climate targets, for instance, and our aim is really to ensure that they also continue on this trajectory, even though there are other competing priorities.
Did anyone else want to comment on the global situation? Yeah, Keith, go ahead.
Yeah, so I've been at RAP for about 16 years now, and it seems that whatever the issue is, the answer is the circular economy when we're talking about climate change, economic downturns, fragility in global markets.
Not tax cuts for the rich. Okay.
Couldn't possibly comment on that. But okay. I think what we can see at the moment is that there are issues in the length of supply chains. The whole just-in-time philosophy has been challenged by what's happening now and what happened over the last 3 years. There's a really compelling case, I think, for investment in shorter supply chains, a circular economy where we're using more materials and we're de-risking the supply of that. So from a business point of view, I think it makes sense. But also there's a latent demand from consumers for all of this. And that's something that we think perhaps hasn't been picked up. So we produced a report this week on textiles, which is looking at actually how many people want to buy secondhand and how many people want to rent. So if we think about how people interact with products, if you like socializing and you like looking great all the time, you want to have the latest clothes, or you want to look fabulous and feel fabulous. You don't want a wardrobe that's overflowing with stuff you don't wear, because that's a burden, especially if you've got limited space. So actually these business models address social issues. It's not just about the economics. It's about the fact that actually people want this, but they don't say, I want a circular economy. What they want is less clutter and access to great things. So it's about being able to articulate to customers how they can have exactly what they want, but have a lower environmental footprint and feel good about it as well.
Yeah, great point. Okay, we're up to 20 open questions now, so I really do need some help with the voting. So please, please everyone, do have a quick cruise through the questions that have been posted, and give a thumbs up to the ones you'd like us to answer first. Next up, though, is we're coming back to you, Gary, again. An interesting one, though, about what metrics are you using when you're evaluating clients for green loans, for example, for regenerative agriculture, nature-based solutions? Is it, are you looking at soil, water, carbon, or just simply the farm property?
Cool.
Asset
Thanks, Steve. I've been bashing through text answers to some of these questions.
Okay.
The ones that were best directed to me, but I think without trying to sort of dodge the question, that's not my intention, but the point about sustainability is it means nothing without context. And so you really need to understand the context and what is the context within which this client is operating, and what are the appropriate metrics to follow, right? Because there'll be what's good for the goose isn't necessarily good for the gander in this case. If, for instance, if the project is about, I don't know, let's say restoring the pH of soil or something like that, then we're probably not going to track water consumption, right? So you've got to find metrics that are sort of relevant to the intervention, and of course, measurable and monitorable and all that kind of stuff that you can then link back to an incentive. So yeah, it's a sort of long-winded answer to the question, but the short answer is it depends.
Well, I think that's an accurate answer as well. So yeah,
I would like to echo Gary on that. It depends. And I think there is this tension that we see between enabling us to have comparability between different companies in order to compare peers and see who is doing well, maybe finding best practices, see who is lagging and encouraging them to improve. And on the other hand, having that specificity, giving companies the opportunity to really define for themselves what they see as the most relevant and the most material for their particular business model and their particular aim in terms of circularity, and then to communicate that well, both to investors, but also to other stakeholders, such as their employees and the general public.
Is there, though, I guess, a set of metrics, and then you'll draw upon a subset of that? Is there a resource, like, are you looking to GRI, or we heard earlier today about CTI and circularity, what was it called? Circulytics. are there some resources out there that a company that was looking to provide some more robust quantitative evidence to support their claims to circularity that might be more influential, or is it possible to sort of provide a steer as to where someone might go that's looking for that, a bit more structure?
Let me come back to you on that, but it's quite sector specific. So I think it very much depends on that particular subsector. But you mentioned many of the guidelines as well. I also find the EU taxonomy quite helpful in just trying to understand what types of activities are considered circular economy related, and to have some kind of agreement on that within the investment industry. So I think there will be, in my opinion, hopefully some consensus evolving around this in the future in a more detailed way. But at the same time, I think sometimes it is counterproductive to dictate to a company exactly which metrics are the most relevant, because the company will know their own business model best. And from a stewardship perspective, our role is really to ask very critical questions and give the company the opportunity to convince us and explain to us in a very structured way why they have selected certain things. Does that make sense, Steve?
Yeah, it does. Yeah, I mean, again, back to the context being so critical. Now, I'm not going to still quite give up, though. Patrick, I am curious, again, in your project that you were describing, have you got a data sort of spine that things are building from, or to bring a bit of
yes, yeah,
consistency to it?
Good question. I mean, we're still early on in the project, and I would think that actually, like, EIB has been developing their circular economy portfolio for a number of years. So I would expect that we use also that existing indicator or metrics framework, and then try to adopt it or adjust it to the local context. It's again, I think there won't be possible to translate it one-to-one. Again, also depending on the sector, so there needs to be some adjustments. And then this will then also depend on the data availability, because many of the companies, the smaller ones, which probably would be supported either in Bangladesh or Morocco, etc., might not be able to provide data on many of these things. So generating that information is also part of the overall project. So that needs to go in a way, I think, hand in hand. But I was also going to refer to what Lisa said about the EU taxonomy, and the equivalent in the UK that's being developed. But there's also taxonomies around the world, and there's also efforts on harmonization, and circular economy. In many of those is one of the environmental objectives, with specific technical screening criteria, what constitutes circular activity or not. So I would continue to watch this space and see what, because it's still evolving, but that's, I think, maybe quite an important framework that will have impact.
And to the point we started with, this is already happening, so there's really not an option to wait for that evolution to complete. People need to be engaging, and that's going to be a really good starting point to get a structure to it. Okay, thank you all. Gary, it looks like you're in the hot seat here. That the next 4 questions are all coming your way.
I was trying to be as anodyne as possible as well. So
yeah,
imagine when I'm trying to provoke.
Well, I trust that we'll be able to bring everyone else in on these as well. So let's start with the one from Joe, because I think that's actually, while you you set it up. I think everybody will probably have a view. So let's hear more about your distinction between the transition being a cultural rather than an engineering problem, and specifically why the finance sector is best placed to provide the means and the motive to help achieve that shift. So
yeah,
you would start, Gary, but then it'd be great to hear from everybody else on this as well.
okay. Well, I think that, I mean, if you look at the kind of broad sweep of human progress, such as it's been, it's a catalogue of our clever tendency to overcome a balancing feedback loop with some combination of energy and technology, right? And in the process of doing that, we set up the conditions for the next problem. And so we engineer our way out of one problem and we set up another. And we don't seem to be able to break that habit, right? That we alone on Earth are addicted to exosomatic energy, which is to say that we use energy outside of our bodies, and all other living things manage fine with the energy that they consume, the endosomatic energy. So there's really the only limit to our energy and material consumption is our imagination, until we reach hard limits, like, for instance, climate breakdown and so on. We have to change this pattern, this modality, because if we don't, the only place this ends is geoengineering, which then sets up the conditions for our next, you know, the next problem, right? It doesn't really solve it. It's a response to an immediate pressing concern. But at some point, we've got to ask deeper cultural questions about what is it that, what are the goals of the system that we've kind of, that we're all complicit in, and do we need to revisit the goals of the system? And I mean, this is not a new idea. You know, do we have to actually think about what are the objectives of economic growth? What are the outcomes that we're trying to serve? So I mean, it sounds very philosophical, of course, but it's really just a commentary on this sort of human condition, that there is no problem to which we can't conceive an engineering solution. The trap, of course, is that it's easy as long as you have an enormous energy surplus. And the implied transition from fossil fuels to zero carbon forms of energy means that our energy surplus is almost certainly going to decline. So I don't know if that avenue is available to us for much longer. Now, if I can continue on the point about the motive and the means. Well, the motive is that financial services as an industry kind of floats on the surface of the real economy. And when the real economy is doing very well, the financial services industry generally does well. And when the real economy is stalling, financial services industries tend to suffer. And so the motive is that we want a thriving economic system with, you know, participatory economic system, with people doing well, with people having opportunities to engage with one another, to transact, to enjoy cultural and social services as well as economic services. So that's the motive, is that the financial services industry wants the economy to be doing well. Okay. The means is that money is an energy and resource concentrator. So when money is deployed in the economy, it's effectively directing energy and resources to flow in a particular way to serve a particular end, which means that how the financial services industry directs its product, money, actually creates the future that we get. Now, that means decisions that we make in the present determine the future that we get to a very great extent. So if it's true that we have both a motive and a means, then all we need to do is think a little bit differently about what's our purpose. And that's what we're trying to do. you know, we have a purpose at NatWest, and it's you know, as I said, it's to make sure that all of our stakeholders thrive.
Very good. Thank you, Gary.
I really
Brief
like this.
additions to that, Lisa? Yeah, go ahead.
Yes, sorry for interrupting. I really like this philosophical approach. I think it's often really good to take a...
Uh-oh. Okay, well, let's hope we get Lisa back. Keith, Patrick, did you want to briefly comment on that? Keith, you want to go first?
Sorry, just finding the unmute button. Yeah, so I thought that was really inspiring, and it reminded me of something someone said about 100 years ago. So Frank Knight, neoclassical economist, highlighted the importance of looking at the wants which an economy generates, not just the efficiency in satisfying that want at any given time. So it's about what we can do and what the economy can do to create the demands that are going to lower our overall environmental impact. So it's not just thinking about making more and more money for the sake of making more and more money. It's thinking about how we're going to make that money in a more sustainable way.
Welcome back, Lisa. Do you want to pick up where you left off?
I think every webinar has one technical issue, so apologies that was me this time. I just wanted to thank Gary for this philosophical approach. I think it's really important for us to think fundamentally what is the purpose. And in my role, this what really helps me focus my mind is often that fundamentally a lot of this finance is people's pensions. So it's everybody's pensions that are being invested now for them to then have a nice retirement. And fundamentally, part of having a nice retirement is having the financial basis to do that. But part of it is also living in a world, in an environment that is nice to live in. So I don't think we should fundamentally divorce those two aims.
Couldn't agree more. And maybe I could ask the team to pop a link in the chat to the Make My Money Matter initiative, which is working really hard to get corporate pension funds more sustainable with their investment practices. And any companies here whose pension funds are not could please have a look at that. Patrick, did you want to comment on this?
Yes, briefly. I mean, yeah, I agree with all of these things that were said. Rethinking the purpose of economic growth, or rethinking economic growth as such, I think is important. And then, I mean, the issue, whether it's cultural rather than engineering, I think the whole issue around plastics pollution is a good example, because when plastics were introduced, plastics packaging or single-use items initially, people had to be taught how to use it and then how to throw it away. So it's kind of learned behavior. And so we have internalized that now. We see in many other parts of the world where this is just beginning to happen. So it's really a cultural shift, and maybe similar also with fast fashion. It's mostly a cultural issue rather than an engineering problem. So that's why it's often circular economy is not about only changing the system behind the scenes and then enabling consumers to continue as they have, but it requires both changes. There's some engineering issues as well, but not mainly.
Great stuff from everyone. Thank you so much for that. That's really inspiring. I think that important lesson for people like myself that are out there trying to drive change, to perhaps definitely keep in mind about social norms, and that's perhaps where we need to focus our energies as a really fundamental enabler of the change that we want to see. Okay, thanks very much, Joe, for that question. The next one, well, firstly, we're running out of time rapidly, so pretty much last chance to get your votes in. If there's a question there that that you're wanting to see. But I like this one from Lotte, again to you, Gary, but I think probably has wider interest, and just in terms of what, if any, pushback have you seen from shareholders, and how has this been dealt with? So do you have to persuade? Let's just broaden it out, and maybe this can be our last question. Do we need to persuade senior management and or shareholders that this is the right way to go, or are they already believing it?
Yeah, it's a difficult one. Firstly, I don't personally engage with shareholders on a regular basis. What I would say as a kind of oblique answer to the question is that shareholders are not a homogenous blob of kind of disembodied profit maximizers, but that shareholders are, you know, people like you and I that have pension funds, as Lisa has already pointed out. We can be impact investors. We can be like, we can have a long-term time horizon, or we can be trying to maximize a short-term return. So it depends on your shareholder, right? And I think that, has everyone got it? No, because all the indicators are still pointing in the, not all the indicators, most of the critical indicators at the system level are pointing in the wrong direction still. We know that, for instance, on climate change, that we need to reduce emissions by 7 or 8% a year, something like that. And we know year on year, and we know that the only times we've ever achieved that has been through disaster, not through design. I suppose the last thing I want to say before I shut up for the day is that we would rather see us thread this needle by design rather than by disaster. But one way or another, we are going to figure this out. It's only a question of whether we do it voluntarily with a smile on our face, or if we do it in tears.
Thanks, Gary. Lisa, do you want to comment on that?
I hope it will be with a smile on faces. I like that Gary said that shareholders are not a homogenous group. And I think it really depends on the time horizon that shareholders have. So I think as a representative of very, very long-term shareholders, I think it is completely legitimate to have long-term plans and accept some variability in profits in the shorter term if there is a long-term growth potential. And I think what is essential is that how executive management is incentivized is also very much aligned with that very long-term perspective in terms of how they are remunerated. Because fundamentally, I mean, we are not all rational economic actors, like Gary said, but we do respond to incentives. So I think it's a lot about aligning those incentives as well.
Could I ask if you're seeing, because I'm not, circular economy focused funds? Is there anything happening that's really drawing attention to companies that are on this pathway and connecting them to investors that really see this as the future, or is it, are we not there yet? We're certainly seeing green funds. Are they lumped into that? Or is this an emerging category potentially within ESG, where we might someday see special opportunities for investors there?
I definitely have some personal internal examples of funds that are specifically focused around impact. I think impact investing has a lot of circularity aspects, but maybe someone else on the panel, maybe Gary, you have a better overview as well.
Okay. Keith, Patrick, do you want to come in on this idea? No. Okay. Well, Patrick, yeah.
I mean, you were asking about circularity funds. So in Europe, I'm aware of Intesa San Paolo, the Italian finance institution. They are quite advanced and also have a multi-billion euro circular economy fund that I think is quite relevant and might be also setting a standard for others to follow. One thing that we've tried to advocate for is that we would maybe need a global circular economy fund especially for MDBs, the multilateral development banks. Maybe it could be managed by the World Bank or by GEF, the Global Environment Facility, something similar to the Green Climate Fund. So again, related to the question, to the issue I mentioned at the beginning. So there's a lack of circular investments going into developing countries. So a fund like that could potentially address that issue. But that's only hypothetical at the moment.
Okay. Well, we're really, I think, out of time now. I was debating risking the wrath of my team and doing another quick round, but I think it's best that I not impose on you any further and run over time. So I'm just going to say a huge thank you to Keith and Patrick and Lisa and Gary for sharing your wisdom with us today. It's been a really enjoyable conversation for me. I've learned a great deal. And so can't thank you enough for joining us. Thanks also to our audience for giving us such interesting questions to work with and for being so engaged, both in the Q&A and in the chat. It's made this session, really quite informative and entertaining. So at least for me, I'm going to speak for others. And so now that brings us to an end for the first day of our Climate Action Summit. And so we're shifting gears now. And tomorrow, our focus is going to be on nature and nature-based solutions. We have 3 nature-based solutions sessions planned, and then we're going to finish the day with a debate, nature versus technology, and really exploring which. It's a debate, so we have to be a little bit extreme, but the idea is to explore which of these pathways holds the most promise for us to solve the climate crisis in which we find ourselves. It should be a lot of fun. We've done these debates before and they've been very successful. So I hope you'll join us. Please remember that having registered for this session does not mean you're registered for any of the sessions tomorrow. You need to register for everyone separately, I'm afraid. So there is a link in the chat to take you to our website where you can register for those sessions if you haven't done so already. I hope you found today's sessions worthwhile. Now, I think we might have another slide. Yes, we do. So just some other programming that we do have coming up from Global Compact Network UK. Next week, we've got a webinar on social mobility, improving business and society. It's the 3rd in a 4-part series. It's been really interesting. A link to register in the chat. And I want to draw your attention to a report that we published last week, Measuring Up 2.0. It highlights how the UK is doing on the SDGs, and specific to this week's events has lots of deep analysis on the UK's progress or lack of progress around reducing waste, strengthening biodiversity, conserving nature, and taking action on climate. So certainly for anyone from the UK in our audience, we really encourage you to have a look at that. And finally, if you're not following us on Twitter or LinkedIn, please do so. A great opportunity for you to just keep in touch with what we're getting up to. And finally, when we close the webinar, you will be invited to participate in a very brief survey. It shouldn't take you more than 2 minutes. Your feedback would be tremendously helpful for us to improve the quality of our programming going forward. And so that's all from me. Have a great evening. I hope we'll see you all again tomorrow. Thanks again to our speakers. So long.